Impact of Goods and Services Tax, GST, on real estate and construction sector in India. Implications for real estate developers. 1. Input tax credit, ITC. Under GST, real estate developers can claim input tax credit, ITC, on taxes paid for inputs such as raw materials, services, and construction-related expenses. This reduces the overall tax burden and lowers construction costs. 2. Simplification of tax structure. GST replaces multiple indirect taxes such as VAT, service tax, and excise duty, streamlining the tax structure for real estate transactions. This simplification reduces compliance burdens and administrative overheads for developers. 3. Transparency and compliance. GST promotes transparency and compliance in the real estate sector by eliminating tax evasion and ensuring proper documentation of transactions. Developers are required to maintain accurate records and adhere to GST compliance requirements. 4. Impact on affordable housing. GST provides concessions and incentives for affordable housing projects, including lower tax rates and eligibility for input tax credit. This encourages developers to focus on affordable housing projects and promotes the government's Housing for All initiatives. Implications for home buyers. 1. Impact on property prices. GST may impact property prices, depending on factors such as input tax credit availability, tax rates, and market dynamics. While GST reduces the overall tax burden for developers, its impact on property prices varies across regions and segments. 2. Clarity on taxation. GST provides clarity on taxation for home buyers by standardizing tax rates and eliminating ambiguities associated with multiple tax regimes. This enhances transparency and helps home buyers make informed decisions. 3. Reduction of tax cascading. GST reduces tax cascading by allowing input tax credit, which prevents taxes paid on inputs from being included in the final price of the property. This leads to cost savings for developers, which may be passed on to home buyers in the form of lower prices or better amenities. Challenges and concerns. 1. Compliance challenges. The transition to GST may pose compliance challenges for real estate developers, especially smaller players who may not be well equipped to handle complex tax requirements and documentation. 2. Transition issues. The transition to GST from the previous tax regime may result in transitional issues such as input tax credit reconciliation, tax refunds, and adjustments. Developers may face liquidity challenges during the transition period. 3. Impact on land transactions. GST applies to transactions involving the sale of land for construction purposes, which may increase costs for developers. However, the availability of input tax credits partially offsets this impact.